And it's interesting because there are a lot of people that don't respect that old adage, and I think it makes a lot of sense. You got to have some patience.
New money, you talked about Caesars. Progressive is another company that I believe that you are keen on. Talk to us about the take on that one.
Sure. So Progressive, everybody knows Flow. They've done a great job marketing. And what's interesting is they're really recognized as an auto insurer. But what they've done is moved into bundling. So not just cars now, but home, commercial insurance, higher risk general liability policies. They've really done a good job in marketing themselves and extending throughout the insurance world. Fantastic company, continues to show good growth, pays a little dividend while you wait.
What else is on your radar?
Well, I mentioned Caesars earlier. I think that's worth revisiting.
Okay.
The problem with Caesars, a lot of people are concerned about the leverage that it has. And again, with interest rates, as you talked about before I came on, they've been moving up in the last year and a half or so. So leverage, any sort of debt concern, is something that's on a lot of investors' mind. In this case, we think that over time, given the steady flow of gaming interest, there's going to be an opportunity for them to deleverage, and they've taken action on that so far. Plus, they've got a big property on the Strip in Vegas, which they're likely to be selling in due course. They have been hinting about that for 2 years now.
Yeah, our BI team, definitely notes that the margins are still strong at Caesars, but they're concerned about some of the elevated operating costs and cost pressures this year. Is that something that you think investors might then have to be patient, maybe for some returns because of those concerns? Just got about 30 seconds left.
Yeah, not overly concerned about that, but I think online gaming is really what people should focus on. That's really taken off. They've done a great job marketing that and managing it. So that's what I would really focus on.
Yeah, our BI team saying digital segment sales could rise 28% in 2024 after that unit earned EBITDA finally in 2023, or in 2023, I should say. Hey, listen, George, thank you so much. George Young, he's partner and portfolio manager at Villery and Company out there in New Orleans. Just got a few minutes left in the trade, about 10 minutes.
Yeah, stocks off their worst levels of the day, but still down 0.5% on the S&P 500. The Dow down 0.6%. The NASDAQ 100 right now down 0.5% as well. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Coming up after the close of trading, we will be hearing from Adobe Systems. Bloomberg Intelligence says Adobe's sales are projected to climb 10.5%, a third consecutive quarter of double-digit gains as demand remains steady for its creative and document cloud products. Still, the focus of the conference call may well be on rising competition from OpenAI. Right now, Adobe ahead of earnings down 0.4%. Cleveland Cliffs CEO Lorenzo Goncalves says he would consider another bid with union support for United States Steel, albeit at a significantly lower price than the existing offer from Nippon Steel Corp. That potential bid, though, is dependent on the current Nippon-U.S. Steel tie-up falling apart. This from Goncalves in a telephone interview. Right now, we do have shares of U.S. Steel down 7%, shares of Nippon Steel, the ADRs in the U.S., down by 4%. Dick's Sporting Goods shares higher after reporting sales that surpassed analyst expectations. Dick's shares up now by 15.3%. Macy's now says it is ready to let Arkhouse Management and Brigade Capital Management look at its finances. With more, here's Bloomberg's Denise Pellegrini.
Charlie, in a proxy statement filed with the SEC, Arkhouse says Macy's is open to signing a confidentiality agreement. It would grant its suitors access to certain information about the business. That's a process known as due diligence. And the move comes after Arkhouse and Brigade made an improved takeover offer of $24 a share for Macy's this month. In January, Macy's rebuffed a bid of $21 a share from the investor group, saying the offer lacked compelling value. Shares of Macy's are up just about 12% over the last 12 months, Charlie, and that gives the company a market value of just about $5.7 billion.
And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just about 4.5 minutes left in today's trading session. Getting ready to head over to our TV colleagues, talk about the trade on this Thursday, wrap up the Thursday trading session. In the meantime, a story by our own Joe Doe, who was with us on in the 2 o'clock hour.
You know what's so kind of him? Comes on our show,
everything.
Talks to us about what's going on with U.S. Steel and the entire steel industry around the world.
Right.
And then he goes and writes this story?
Do you think he must have been I wonder if the editors were working on it.
Yeah, maybe.
As he was on air with us. Here's the story. Cleveland Cliffs, a well-known company CEO, saying he'd consider another bid with union support for United States Steel Corporation, albeit at a significantly lower price than the existing offer from Nippon Steel, which doesn't seem like it's fair. But I guess we'll have to leave that up to investors and so on and so forth to figure out.
So that potential bid is dependent on the current Nippon Steel, U.S. Steel tie-up falling apart. That's according to a phone interview with the company's CEO. If he were to make an offer, the Cliffs CEO did say he'd have the backing of the influential steelworkers union that's also blasted Nippon's takeover approach. The Cliffs CEO is known in the industry for his colorful and combative approach. He did tout his closeness and support from the influential steel union and then proved his point by actually dialing up the USW president into the call with Bloomberg News. In the call, Carol, McCall reiterated the union support for a potential Cliffs bid.
That's pretty
wild. Cool.
Well, I'm taking a look at U.S. Steel shares right now. They were down as much as 11% in today's session. They were at their high only down about 0.6%, so quite a volatility swing. Right now they're down about 7% in today's session. I'm just trying to look at kind of the trade here and just seeing if that news a little bit kind of off their lows. So maybe, I don't know whether this deal is kind of influencing it, but there's a lot to go before we figure out kind of what's next for this name.
Yeah, the stock is down about 20% in 2 days. It's on pace for the biggest such loss since back in 2020, kind of trading around where it was before the deal was announced. So investors are saying, wait a second, this might not actually happen.
I love putting David McCall into the call.
It's pretty cool.
It's like, hey, just so you know, on board.
Joe Doe, if you're listening right now, thank you again for coming on when you were working on this story. It's good to have you on the program.
Unbelievable. Yeah, and stay tuned because there's more to be known on that. Speaking of staying tuned, don't go anywhere. We're going to head over to Scarlett and Alex over on our TV side. Count you down to the close on the
the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day on this Thursday. Scarlett Fu and Alex Steele here with you. We're counting you down to the closing bell, and we're bringing in our friends in the radio booth to take you beyond the bell. Carol Massar and Tim Stenovic. Hey, guys.
We are friends.
We are friends.
I'm not a heart. That was not a... Do that again, because that was...
Do you know my daughter always makes fun? She's like,
You know what?
Mom, what is
That was like a circle. She's like, we're friends.
Carol, you can't see it on radio. It's okay.
Okay, on radio, it
We
was
are simulcasting
perfect.
streaming,
On
so it's
radio,
okay.
it was perfect, by the way. What an interesting day, guys. So inflation's still an issue. I keep thinking about the moves that we've seen along the U.S. Treasury yield curve. Kind of back up, looking at that 10-year, at 429. That's pretty significant, a move up. And I feel like we continue to kind of hit that bar when it comes to that 10-year.
Okay, so a risk-off day also includes what's going on in cryptocurrencies today. I do have to hit Bitcoin because I've talked about it so much over the last week or so. As of yesterday, we had 4 days of records in 6 trading days. Today, certainly an exception. Bitcoin down 5.35% as we speak. You know, maybe it's just all risk-off. It can't go up forever, right?
You know, it's interesting that we've seen yields move up every single day this week, and equities have held up a little bit better. You know, yeah, there was a day or two where they did gain, but for the most part, even today's declines are fairly contained.
Yeah, and I just really wonder, like, when that actually changes. Like, at some point, you get a big enough move, like maybe it's the 2-year at 5%, but we are a long way away from that. But is there a moment where we kind of roll over a little bit? Oh, there we have the bells. All right, so we are definitely off the lows of the session. The S&P down by about just 0.3%. Volume did pick up a little bit in the last half hour of trading, so it was definitely a little bit of the quote-unquote buy the dip, but we're still negative, but off the lows, Carol.
Yeah, and you know what? It's interesting looking at the market. What really took it in a big way was the small cap universe. Russell 2000, Scarlett, down about 2% in today's trade.
Yeah, pretty decisive move lower, even as the major indexes, including the Russell, did come off their lows in the last 30 minutes.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the Gel Razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence, I did that all in one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blade, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
International and Fisker, $2.05.
It's not
a
only
share each.
the Ozempic. It's the Oprah lack.
But the Oprah is linked to Ozempic.
Yes,
Yeah.
but that idea. But guys, I got to be honest. You can talk about the declines all you want, but the big mover to me is in the bond market. You have 10-year yields up by 10 basis points, and it's also important because it broke through some key technical levels. So we're now extended above all the moving averages for the 10 years. So you have to wonder if there's going to be position reshuffling into tomorrow as well. And we've seen a really solid move in yields this week, and equity is doing all right.
Yeah, absolutely. Hey, folks, we are still having a little bit of our earnings coming out. Adobe just crossing the Bloomberg terminal. I'm going to go right to one headline that catches my attention. Adobe announcing a $25 billion share buyback.
Wow.
Okay. Yeah, wow is right. Right now, the stock goes down about 6%. The outlook from the company, seeing second quarter adjusted EPS, $4.35 a share to $4.40. The estimate out there is $4.38. Look backward, the first quarter adjusted EPS, $4.48. That's 10 cents better than the street was forecasting. First quarter revenue, $5.18 billion versus the estimate of $5.14 billion. Stock still down about 2%, 3%. So interesting to see kind of this negative reaction, especially after that $25 billion share buyback.
Yeah, Dan Dern, the company's executive vice president and CFO, said that the $25 billion share repurchase program demonstrates Adobe's continued commitment to returning capital to our shareholders. The company's CEO saying that Adobe's done an incredible job harnessing the power of generative AI to deliver groundbreaking innovation across our product portfolio. Have you guys seen the way that Adobe is using AI in its suite of products?
I've seen the commercial, and it's very impressive.
It is really impressive, and it's very easy to do. Like, I have friends who don't even know how to do this stuff that are actually able to do this.
And I think that's the key there, right? Because for people who don't use Adobe frequently and just use the free version of it, if you can hook us, then we'll start paying for it.
Right.
But that $25 billion share buyback is so notable because, of course, Adobe did not go forward with its purchase of Figma, which would have cost $20 billion because of regulatory issues. So the big question mark was how it was going to spend it. Would it look into another purchase? I mean, that was not really in the cards, but to put it all in a buyback, interesting.
You know, I just want to point out that the second quarter revenue outlook maybe is what is dragging the stock a bit lower. So they see up to $5.3 billion. The estimate was for 5.31, so a little bit light on that. I just want to touch on Ulta for a second. It's a flip side story. That stock up about 6%. They have a $2 billion buyback, and they see pretty strong sales for the year. Comp sales better than estimated, earnings better than estimated, and sales better than estimated. Invest in your face, guys. That's the takeaway from Ulta.
Hey, you're preaching to the choir, honey. You're preaching to the choir.
Girl, I hear you.
Hey, you know, it's interesting, though. Ulta is up about 15% year to date. I think it hit a 52-week high in today's session. So, yeah, this one up about 4%. So just building on that gains, right? It's like, yeah, you got to, Tim, you're investing your face.
Yeah, of course.
I think our jobs depend on our
who doesn't have a routine?
That's what I keep saying.
Who doesn't have a routine in this day and age?
Yeah,
right?
my husband just started using face cream, and when he does it, it gets me so stressed. Because I'm like, will you just calm your face? Like, just pat, just don't. It hurts. It hurts. It doesn't use soap. It's a whole thing.
All right, it's a whole thing. All right. A tale of two earnings. Ulta up about 2.5% in the aftermarket. Adobe still under pressure. I think you hit it right on the nose, Alex, in terms of that revenue forecast. It's down almost 7% in the aftermarket. All right, that's a wrap. Our cross-platform, yes, face. it matters, like the protection, the uses. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, folks. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Check out what Bloomberg Opinions Beth Coet writes in her most recent column. And I quote, because sometimes it's just so good, you have to read
It's
right
so
from
great.
it. A big, powerful organization with a carefully manufactured image gets embroiled in a conspiracy theory about one of its most beloved and valuable brand ambassadors. To try to quell the uproar, said organization takes to its social feeds. But when those posts turn out not to be the full story, the conspiracy mushrooms spark an even more intense scrutiny and mass intrigue.
Dun, dun, dun.
What do you think we're talking about?
We're talking about the Palace's crisis involving Kate Middleton. And it's kind of interesting, so interesting that it is among our most read stories on the Bloomberg. Who'd have thunk? I would have thunk, because it.
You've been wanting to do this since Monday, be honest.
What?
You were looking for the angle.
We've all been
You were like, how
following-
can we work this in?
How can we do it? I
You
mean,
called it Kate Gate. You called it Photogate.
Beth Coet is here. She is senior columnist for Bloomberg Opinion. She covers corporate America. She joins us here in our Bloomberg Interactive Broker Studio. I'm so glad, you tied, thread the needle so that we could do this story.
There's a business angle for everything.
Tell us about
There
the
really
bet.
is.
I mean, but it is interesting. We all know about the firm, right?
Right.
In terms of the royals that are over in the UK. It's amazing that they are in this predicament.
Right. I mean, I think that's the thing that's so shocking here, right? They're supposed to be very sophisticated. They have a massive PR apparatus. How did they get this so wrong? And I think that is where we can make the connection to business, right? They are a brand. They are the firm. So how can companies kind of look at this and say, we cannot make the same mistakes?
So what do you think was the moment where it kind of all unraveled here?
So yes, I do think there was a moment when sort of your casual, royal watcher became like crazy internet sleuth.
Yeah.
And I think that was the photo, right? Like if you hadn't been paying attention, that's when you started. And that's when,
That's totally true for me.
Right?
Like as soon as I heard about that, I was like Googling everything, watching the TikToks.
Right, you're watching the TikToks,
Yeah.
you're like trying to look at the photos to figure out what had been doctored, and it just raised so many more questions. And I think that's
we
the
have
thing.
the photo up. Listen, it's the photo that's been seen around the world, to be fair. I mean, every tabloid's been on it. We've all been on it. But it was interesting because they obviously put it out there to send a reassuring sign because everyone was like, kind of, where's Kate? Where's Kate? What's going on? We know there's surgery involved. We don't know all the details, but nonetheless, this was put out on Mother's Day in the UK, right? To kind of just say, hey, everything's okay. And then so quickly, it came undone.
Right, it spiraled out of control. People were like, what is going on with this picture? There's all these little details that have been edited. And I think what sort of even took it up a notch was they tweet after the fact, kind of maybe a couple days later, a day later, their handle tweeted out, apparently a direct message from Kate. I'm so sorry, like a lot of amateur photographers, I dabble in, Photoshop basically, and it's just so hard to believe.
You know what's crazy, and forgive me if I know too much about this, but Kate is an accomplished photographer, and most of the shots that are sent out, I feel like shared with the public, are often photos that she takes. She has kind of a real I feel like control over this. Tina Brown, who's a royal watcher, she's a Brit, well known for when she was editor of Vanity Fair and more. I heard her on air talking about that this is an individual who's so meticulous. So to see her kind of come out and be like, oops, I made a mistake, it just doesn't fit with kind of who she is. Make the connection, though, in terms of brands who often make mistakes, the role of social media, like why this has kind of really caught your attention and how you think about it much more broadly and really for the Bloomberg audience.
Yeah, I think a lot of big institutions have lost trust, right? Business being one of them, and these organizations take to social media, to their social platforms, to have a direct relationship, to have a direct conversation with their consumer. And that can be a really good way to build and restore trust. But then when you mess it up, it just can really spiral out of control. This is a very sophisticated audience that will just parse everything you do. And if you make a mistake, they're going to be all over it.
This stuff happens all the time to different brands, and you write about some of them in your piece. Before we get to those, I want to just start with the idea of what can the firm do to recover from this, or at least how could they have handled it differently?
Yeah, I think the problem here is that they are really straddling two worlds, right? On the one hand, they've been really active in new media, social, we want to talk to you directly. And in this case, they've really defaulted to old ways of doing business, talking about private engagements and personal matters. And you kind of can't have it both ways. You can't talk to your audience when it's convenient for you. They want to hear from you all the time, and you have to make a choice. And I think that's a big part of the problem.
You know, it's interesting going back to Tina Brown, who was on another network, one of the major networks, and she made the point of that the Queen in her, I guess, last 8 or 10 months, which I had no idea, apparently said she had a form of cancer, but she still at some point did some Zoom video, and that maybe something as simple as Kate going out on a Zoom and kind of addressing UK citizens directly might have just made everything go away and been a much easier, simpler way to kind of deal with all these concerns.
And the fact they haven't done that, I think, raises a lot of questions for people. Why have you not just done something like that to clear this up?
I mentioned that you talk about another company in your piece that had I don't want to call it a similar misstep, because it's hard to compare what's going on with the royal family to anyone.
I know. I was trying to think of examples. There's nothing that's quite parallel.
But when you are thinking about it from a brand perspective, it is absolutely parallel here. And I feel like that there are so many examples of companies making missteps. And you chose just one for this piece.
Yeah, and I wrote about this because this is a company I've covered in the past. And it's and I think you could probably look at a lot of direct-to-consumer brands and see examples of this. But this is a small brand called Daily Harvest. They're direct-to-consumer, vegetarian, vegan, frozen food company. And what happened was they really just capitalized off the Instagram era. That's how they built their audience. But then they had a food safety crisis, and they took too long to really talk to their consumer directly. And what happened was their customers filled that silence with their own theories, kind of critique of their failings. And I think that's the real risk here. You cannot, again, talk to them when it's convenient.
Beth, I mean, lots of companies get into trouble, and I think about, Chipotle for a long time, or Lululemon when it, the sheer, I don't know.
The Chip Wilson stuff.
Right, exactly. Like, there's lots of things. And you know what was interesting? I also thought about, like, using social media to address concerns versus maybe sometimes good old, I don't know, like doing a Zoom, or I don't know what it is. Like, we need to think about, like, how brands communicate with consumers, because sometimes I feel like you throw something on social media, you think it's all done,
right?
And that isn't always a great way of communicating.
Yeah, I think
sometimes going back to some old-fashioned ways, whatever that may be, is better.
Right. I mean, I think we do think of. I mean, that's the thing, right? Social media for everybody is very much manufactured authenticity, right? It's like, oh, look how accessible we are, but we know that this is so performative in so many ways. Right. And I do think maybe having an interview with someone, talking directly to people, and just not kind of putting out something that's so polished all the time maybe helps a little bit.
I think the thing that's also different now is the way that you have these internet sleuths that are able to figure out what's going on. Because I would have looked at a picture like that and been like, fine. Yeah, it's a picture.
Like, what a nice family.
Yeah.
Right.
Yeah, but I think about
Happy Mother's Day. I also didn't know Mother's Day in the UK was different than Mother's Day here. That's a big takeaway that I have.
It is.
That was a big takeaway.
But I think about, did you ever play those games like it's like two photos, like find the differences? I'm kind of obsessed with that. And I go through and you think like, I don't see anything, and then all of a sudden you're like, or continuity, like in media. Like, have you ever done that? You're watching a show and you're like, wait a minute, that sweater, it's like different or something.
You sound like you're fun to watch movies with.
I'll do it all the time. But it is interesting, right, that the social media world is savvy and can say, wait, something's off. And it makes you think about brands need to be really wary of that, right? Yeah. I don't know. AI is going to make it all perfect, so what are we worried about?
I think that one guarantee we have, Carol, is that the story is going to continue.
Yeah, I think it's...
Until they say something.
It is like from where we started, that anything you've ever seen, The Crown or books written about royalty, the firm, like, they have such control that for them to be in this situation is pretty remarkable. It is a great lesson for anybody who's got some kind of company or institution or brand. That's really important.
Well, Beth Cohen has absolutely figured it out. Senior columnist for Bloomberg Opinion, who worked a way to make a connection to business in the royal family. And we thank you.
Anytime.
We thank you for that.
Thank you.
4:21 on Wall Street. We do check markets all day long at Bloomberg. We are keeping an eye on shares of Adobe after hours. Adobe stock is plunging right now. We're checking on Adobe. It is down now by 10.4%. Adobe delivered a weak outlook for sales in the current quarter, fueling concerns that new AI-focused startups pose a competitive threat. Adobe said revenue will be $5.25 billion to $5.3 billion in the period. Analysts on average were projecting 5.31, according to data compiled by Bloomberg. After hours, Adobe now down by 9.7%. The company did announce a new $25 billion share buyback program. Again, after hours, Adobe now down by about 9.5%. A move lower for stocks today. The Dow, the S&P, NASDAQ, and the Russell 2000 all finished in the red. The Russell 2000 was down today by 2%. S&P fell 14 points, down by 0.3%. The Dow dropped 137, down 0.3%. The NASDAQ Composite Index was down 49, a drop there of 0.3%. 10-year 4.28% with a 2-year 4.68%. Spot gold down $11 the ounce to $21.63, down 0.5%. West Texas Intermediate crude down up by 1.7%, $81.07 a barrel on crude, while Bitcoin today was down 3.9%, $70,302 on Bitcoin. Again, Adobe after earnings down now by 9.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Really appreciate it. Well, as we're preparing for this next interview, we realized something. We spent a lot of time talking about what it takes to be a good leader. There's certainly a lot of books out there about examples of strong leadership in business, history, and politics. But something we don't talk a lot about is bad leadership and the consequences of bad leadership that have been left unchecked. And Carol, that's the focus of Barbara Kellerman's new book. In fact, she's written quite a few books about bad leadership.
She has indeed. She is a fellow at the Harvard Kennedy School of Center for Public Leadership, where she was also the founding executive director. She's the author of a new book, Bad to Worse, What Happens When the Bad Festers. She joins us from Westport, Connecticut. Barbara, so nice to have you here with us. Congratulations on the new book. You write a lot about leadership. Tell us about this book and bad leaders. I feel like everybody has a bad leader in their life, sometimes more than one. Why is it that we kind of acknowledge that, and what do we learn from that? I'm not saying anything about my present situation.
What do I need to know about this,
If
Carol?
you've worked in a workforce, come on, at some point in your life, you have a leader that you're like, not a great leader. Why is it good?
Well, we're not going to get personal here. Hi, Carol and Tim. First of all, thanks for having me. Second of all, Tim, you gave me the perfect introduction, because it is absolutely true that what I call the leadership industry, which is a very multi-billion-dollar industry, is replete, full of books on how to be a good leader, but virtually devoid entirely of how to stop a bad leader. So yes, I have focused in my life to some degree on bad leadership, not only on bad, but the most recent book, the one that's just out 5 minutes ago, is called Leadership from Bad to Worse, What Happens When Bad Festers. And it really is trying to alert people that, in effect, the sooner you deal with a bad leader, the sooner you address the problems that a bad leader inevitably invokes, the easier it's going to be and the better it's going to be. The longer you wait to try to end bad leadership, however you decide to go about it, the harder it's going to be. But in other words, it does go from bad to worse if left unchecked.
But that's kind of like anything if you leave it unchecked, right? If there's something that, I don't know if with my life, is like if there's something that you need to get off your chest, if there's something that you need to change in your life,
do it.
Do it, because the longer you take not to do it, the worse it gets. But the problem with that, Barbara, is that that's in our own control, right? And we're not always in control of leaders around us who we may not feel are doing the right thing.
That's exactly right. Again, Tim, you got it nailed. But in the book, apart from the fact that it's sometimes very difficult to upend a bad leader, we tend to think it's going to get better on its own. So we get saddled with political leaders, with corporate leaders, I don't have to tell the two of you about the problem of bad bosses because it's online all the time. I'm sure you hear about it all the time. And we seem to fantasize, number one, that it'll get better of its own, that a bad leader, however defined, and we can go into that if we have time, however defined a bad leader is going to wake up one morning and say, oh my God, I've been bad. I really do need to get better. And we similarly fantasize that there's nothing we can do about it. But the book talks about things that we can do about it. So it's number one, an alert to bad leadership. Again, we can talk about how I use the word bad. And it's number two, to alert people to the possibility, not necessarily the probability, but the possibility of acting on it.
Barbara, let me ask you, does every good leader need to be a bad leader first?
Absolutely not. We have lots of examples of it. It's true that we have some examples of bad leaders who either self-correct because they realize they're not doing the best possible job, or they correct because somebody or something intervenes. And that's really what I'm talking about. If I could just say one more sentence, the way I define bad is along two axes. One is from ethical to unethical, and the other one is from effective to ineffective. So you can have a very effective leader who, however, is deeply unethical.
So maybe that's a good segue to get to
some bad
the
leaders.
Case studies, because the book centers around 4 different cases of bad leadership. 2 of them are political and 2 of them are in business leadership. I want to go to one in business that I think everybody's familiar with, and that is Elizabeth Holmes, the CEO of Theranos. And I looked up where she is right now. She's actually serving time as we speak.
I was going to say, I think she's in prison.
She is in prison. Talk to me about why you chose her as an example of somebody who's not a good leader.
Well,
I should note, in your view.
Yes, and I make very clear my own bias. For example, I make clear in the book that I'm a liberal Democrat. So one of the leaders that I cover is China's Xi Jinping. And I make clear that I think he's a bad leader because he's deeply oppressive. So yes, by the way, I think it's a very important point that I think one of the reasons we don't talk about bad leaders is because views of who is a bad leader and who is a good one are so likely to differ. But I try very hard to invalidate it. I don't think that's a good reason for not taking on bad leadership full-throated, again, as early on in the process as possible. So I think Elizabeth Holmes is by far the best known to American audiences in the book. Most people are familiar with her story, which, however, doesn't make it any less interesting.
Well, wait, can I ask you something? Can I just jump in?
Yes.
Elizabeth Holmes, somebody that we all covered and everybody was enamored and everybody had a cover story or a big story on her. Is she a bad leader or was she fraud? And is there a distinction to be made?
I would argue, Carol, that there's not. I think a leader, I think you said the word fraud. I think a leader who is fraudulent is indeed bad. She's a case in point of somebody who ended up deeply unethical, and also her company collapsed. So you'd have to say there's no more effective an indicator of being ineffective than having your company collapse. But you raised a very important point. The press fell in love with this woman. By the way, the fact that she was a woman and a good-looking woman and an idiosyncratically appealing and attractive woman is not irrelevant to the story, which I make very clear in the book.
Can we, Tim and I were talking and planning for our discussion with you is we kind of want to throw some names at you, if we may, because you've studied leadership, you've written so much about it. President Biden. And good leader, bad leader, why?
Carol, are you trying to nail me on live radio?
And I'll give both President Biden and former President Trump. Good leaders, bad leaders.
Well, I don't name Biden in the book at all, but I do name Trump, and I will stick with one fact about him because it's so obvious and so indisputable and so at odds with the American character that I think it's really worth extracting. I do think he's bad in different ways, although I recognize that many in your audience no doubt disagree with that. But as I said earlier, I think we must take a stand on the leaders we have. And I will simply turn to point out his proclivity for lying, for fabricating, for fantasizing. You know, we teach our kids in the house, and we like to think the people we deal with in everyday life are by and large truth tellers. Note I say by and large. All of us lie some of the time, but he lies a lot. And it is interesting to me that somehow he gets a pass on that with many Americans. So again, I don't think it's ethical for our public, our political leaders to lie as much. Again, I say as much because political leaders lie, but to lie as much as he does to the point of fantasy and fabrication, I'm not sure that's acceptable, and I'm not sure that in times past the American body politic would have tolerated it.
And to be fair, there's been a lot of legal action against the former president. Not our opinion, but there's also been legal cases to kind of really lay out some of his past activities.
Okay, we only have 10
Weigh
seconds.
in.
10 seconds for this last one. What about someone like Elon Musk?
I do mention him in the book. I mention him as complicated, good and bad. And by the way, I know 10 seconds left, but one of the many reasons this is so difficult to tackle is because humans are not widgets. They can be complicated and complex, and Musk is an indicator of a leader who is in some ways great and good, and in other ways awful and bad.
Yeah, two sides to that coin in a big way. No, I would say that many people would agree with you on that. Great stuff. So appreciate it. Barbara Kellerman, her new book, Leadership from Bad to Worse, What Happens When Bad Festers.
Hey, let's get a check on the latest world and national news. Amy Morris is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hey, Tim, Republicans are lashing out at Senate Majority Leader Chuck Schumer over his recent comments on Israel. We've talked about him here on Bloomberg Radio. Schumer called Israeli Prime Minister Benjamin Netanyahu an obstacle to peace in the Israel-Hamas war and called for new elections in the country. Former President Trump and his lawyers were in court for most of today in Florida. Judge Eileen Cannon wrapped up the hearing without a ruling on the motions to dismiss that classified documents case. And in another case, prosecutors say they are open to delaying the start of Trump's New York hush money criminal trial to give the former president's lawyers time to review the evidence that was only recently just turned over. Jury selection in that trial is scheduled to begin March 25th. The judge has yet to rule on that request for a delay. Former Trump aide Peter Navarro lost his bid to stay out of prison while he appeals his contempt of Congress conviction. Navarro was sentenced to 4 months in prison after a 2-day trial in Washington before a federal jury. He was ordered to report to a prison in Miami March 19th. And former President Trump is reportedly thinking of putting a hedge fund billionaire in charge of the Treasury if he wins back the White House. The Trump campaign is saying there have been no discussions of who would serve in a second Trump term. SpaceX launched its massive Starship rocket for a third test flight this morning. The mission was cut short after the signal was lost. Bloomberg's Ed Ludlow says Elon Musk's private space company will call it a success.
The fact that they were able to launch the combined system, the booster and the spacecraft, they had a successful hot separation in that process. Starship traveled on its telemetry over to the Indian Ocean, and then it started to re-enter Earth's atmosphere.
Bloomberg's Ed Ludlow says the signal was lost at around 65 kilometers altitude. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Adobe shares are plunging, now down by 10.3% after hours. Adobe gave a weak outlook for sales in the current quarter, fueling concerns that new AI-focused startups do pose a competitive threat. Again, after hours, we got Adobe now down by 10.4%. The company did announce a new $25 billion share buyback program. It was a down day today for the Dow, the S&P, and NASDAQ. A 14-point drop on the S&P, now at 5150, a decline today of just about 0.3%. Dow Industrials down 137, a drop there of 0.35%. NASDAQ down 49, a decline also of 0.3%. 10-year yield 4.29%, the 2-year 4.69%. Spot gold down 0.5%, 21.62 the ounce. West Texas Intermediate crude oil up 1.8%, 81.12 a barrel, while Bitcoin now down 3%, 70,962 on Bitcoin. Bottom line here, down day for the U.S. stock market, but what about the market backdrop? George Young is portfolio manager at Villary Funds, and he was a guest right here on Bloomberg Business Week.
It's been kind of a tale of two cities in a lot of ways because the S&P is up 36%. That's been fantastic. But if you slice it, look at it a little bit more carefully, it's a different story because there are a lot of stocks that haven't participated in it. S&P up 36%, but on the other hand, the rest of the market, if you look at the equal weighting of the S&P, it's up only 23%.
And you can hear more of the conversation with George Young of Villary Funds on the Bloomberg Business Week podcast. Again, recapping, stocks are lower after hours. Adobe now down by 10.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it.
Are you lost?
Hello, can you guys hear me?
Oh, is there mics on?
There we go. Now it is.
It's
right
Friday's
when,
Eve.
I got a little
The
story to
gremlins
tell.
are out.
Okay.
Yes.
Right when our second kid was born last year, everybody in our home was sick. My mother-in-law, who was visiting really just to help us, was on the couch with a big fever. The big brother had an ear infection and a fever. It was really worrying because we just brought a newborn home from the hospital and she was surrounded by sick people. She had no vaccinations or anything. So I kid you not, when I told the doctor all of this at the doctor's office and that I was worried about our newborn, she said, "Don't you have a weekend house you can go to?" After I stopped laughing, I don't have one. Okay. After I stopped laughing and said that we didn't, she then suggested, and she pulled up the website on her computer, a place called Borum Postnatal Retreat. It looked like paradise. My wife could get away from all of us and go relax on her own, sleep and recover in a peaceful environment while bringing the baby. A staff would take care of everything. But it was about $1,000 a night.
You said, okay, sign me up.
No, we didn't. We just wore masks and kept the three of us away from everybody else. But it reminded me of this because Bloomberg News equality reporter Kelsey Butler writes all about, for Bloomberg Business Week, these postnatal retreat centers. And she's here in the Bloomberg Interactive Brokers studio. These things are amazing.
So amazing.
I've only been able to experience them like looking at the website, but I did call and ask how much it cost and like how much a reservation would be. Back then, I think it was like they were doing like a four nights for price of 3, but it was still too expensive. What are these things?
So these are popping up across the country in luxury hotels, and think about basically everything that you could imagine and want after you leave the hospital at a luxury hotel. So I've talked to a bunch of people that have gone to ones like Borum and others across the country, and they told me things like, let's say you wake up in the middle of the night and you are nursing, you want some water because you're thirsty, you text someone and they deliver it to your door. You get 3 meals delivered right to your room. You have someone that can come by and provide lactation support, or, I mean, for first-time parents, or maybe second-time parents too, you need to learn how to swaddle or take an infant CPR class. It's all there right in your room or just down the hall.
So can you go for a day, 2 days, 3 weeks, 3 months?
So most of the centers have 3-night minimums, but there are ones that you can stay at for weeks at a time. There's one outside of the Washington, D.C. area. You can stay for up to 12 weeks. Of course, these centers, as you mentioned, can be expensive, and you know they run from around $950 a night to up to $1,650 a night. So that can add up pretty quickly when you're talking about a couple weeks.
So it's like high-end hotel, but with things that are obviously baby specific or to having just delivered a baby.
Exactly. And these are staffed, even though they're non-medical facilities, they're staffed by people that often have some type of medical training, medical assistants, nurses, or doulas, which provide a lot of support, and they can flag when something is outside the norm and a guest should seek medical attention.
So they sound amazing. Obviously wish we would have gone to one. It would have been perfect. It also seems like the perfect type of benefit to offer employees in an environment where companies are competing against one another for talent.
Absolutely, and it really seems like this might be something that goes on the same path that fertility treatments did. So, if we talked about maybe 5-10 years ago, only certain really big tech companies were offering and covering things like IVF. And now it's become more of a standard benefit at really big corporations. And, there are companies like EasyKnock, which covers the entire stay, KKR, which offers a discount for people that want to go to Borum. So there's companies that are already doing it. It is new though, so I think we're only going to see it grow.
You said KKR. Who owns them? Is it private equity? Who are who's doing this?
So a lot of these places so far, I talked to 4 across the country, are either self-funded or have very early investors. There's one out of California called Ama & Co., and they have a slate of investors both from the U.S. and South Korea, but only an early round.
Is this concept, it's not unique to the U.S. This is something that is coming to the U.S. now. I think a lot of people are learning about it, but I don't want to say it's standard in other parts of the world, but what do we know about that?
So in South Korea, for example, 8 in 10 moms go to a center like this. And what's interesting there, because the birth rate is so low, the government has done a lot of things to try to incentivize people to have kids, including subsidized stays at these types of centers. There's other countries in Asia that have similar kinds of things set up, and it runs a gamut, kind of like a hotel. You have your more luxury options, and then you have your kind of more budget options too.
Kelsey, we've talked about the costs and stuff, and forgive me, I know we talked a little bit about insurance, but give me an idea. Are insurers largely thinking about covering it? Is this like a new wave? I wonder, forgive me, is this just another great service for those who can afford it and who are probably rich?
I think it's probably a mix of both. So all these centers provide a super bill at the end, and it splits up things, that you receive during the stay. So let's say lactation support, if your insurance covers it, then you can perhaps get reimbursed. But again, with a newborn, it's on you to call your insurance company and make sure they do that, and you might not want to.
Well, as somebody who makes it a hobby to send everything to the insurance company, I can tell you right now, I would probably get back $30 on a bill like this.
It's really discouraging, right?
Yeah, it is very discouraging.
But it is an interesting trend. I think about generations in the past, you had multiple generations living in a home. So somebody came home with a baby and they had parents or grandparents, or whatever that could help in that situation. You do think about, so much pressure on people to get back to work rather than care for their newborns who are just little and really need this care.
It also happens, and I don't know if you have data on this, Kelsey, but one thing that we were told after both of our kids is that the insurance companies limit the number of nights you can be in a hospital, depending on the type of birth.
They want you out quick.
Yeah, they want you out quick because it's expensive. Yeah. So we're not staying in the hospital as long as we did in previous generations.
Absolutely. So right before the pandemic, people were staying in the hospital on average about 2 nights. And what I've heard anecdotally, even though there isn't a lot of really good, holistic data on this, is that, people, they want to get you out faster. During COVID, to kind of deal with staffing issues a bit more, facilities are inducing labors more so they can kind of schedule things a little bit better. And that has just led to people, getting out the door faster. And so there's definitely this need for kind of some support.
Yeah. I don't have a baby, but I want to go stay there.
Hey, you go take a tour.
Take my 21-year-old.
Cool.
It looks like a really nice place. What a fascinating story and a window into a world, and sounds like a growing business area as well. Kelsey Butler, she's equality reporter at Bloomberg News. Her story, as we mentioned, can be found in the forthcoming issue of Bloomberg Business Week, which you can read right now, though, on the Bloomberg and at Bloomberg.com/businessweek. I think the new issue comes out maybe later this week or next week. Yeah.
Looking forward to it.
Good stuff. Thank you. This is Bloomberg Radio.
Connection lost.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Down day for Wall Street, down day for J.P. Morgan Chase, dropping 1.8%. It has been fined a total of $348 million by regulators over gaps in its trade surveillance program, which failed to monitor conduct of its employees and clients. The Office of the Comptroller of the Currency fined the bank $250 million, while the Federal Reserve added a $98 million penalty. Both overseers required the bank to take corrective action to fix the issues, which said they were as recent as last year. Again, J.P. Morgan Chase today down 1.8%. Tesla shares moved lower again today, a day after analyst Colin Langan of Wells Fargo warned of a risk to sales. Langan stopped by Bloomberg earlier today to talk about the risks to Tesla, including its China business.
Well, we're seeing weakness around the world, to be honest. I mean, U.S. actually, if you look at industry data, and Tesla doesn't give regional specifically, but since Q2, it's sort of peaked and softened. So, and that's with all these price cuts, right? So, we've seen weakness in the U.S. I mean, the product is, is it 7 years old now for the Model 3, so it's not fresh and new. We're definitely seeing in China, they're actually flat, but they're flat in a market, at least since Q2 talking about, flat in a market that has been growing. So they're actually losing market share there.
And yesterday, you recall, he called Tesla, quote, a growth company with no growth. Today, Tesla shares dropped 4.1%. NVIDIA's annual Artificial Intelligence Conference just days away. Expectations are high for the semiconductor maker to deliver news that will sustain the blistering rally in its stock. NVIDIA GTC will take place March 18th through the 21st in San Jose. Today, NVIDIA was down by 3.2%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Tim and I getting ready to wrap up the Thursday edition of Bloomberg Business Week. Just a few minutes to go, but you know where it's Friday already?
Friday in Asia.
Yes.
And for that, we can thank Doug Krisner because he's in here on his Friday morning, I guess you could say.
You know it's Pi Day?
Call it.
Pi Day, 3.14.
Yeah.
159.
Line over it.
14159. That's what I know.
I just put the line over it.
I mean, that's 5 of the digits.
Infinity and beyond.
Happy Pi Day, Doug.
Yeah, thank you.
I don't know what's top of mind for us. I'm looking at Adobe down about 10%, so we're still getting some earnings. We've talked a lot about policy versus politics coming out of the United States, whether it's TikTok, whether it's U.S. Steel and Nippon Steel.
So what do you think? I mean, is there an umbrella that you can kind of, put over that? Is it protectionism, nationalism?
Yes, yes.
Concern about foreign ownership? Look at what happened in the UK.
Politics?
Right.
But increasingly, increasingly the United States, looking inward. It's not just a U.S. thing.
I think that
but you wonder about
through
the cost
history,
and
there's this push and pull,
yes.
right? You expand, it's this kind of globalist outlook, and then there's a kind of a reaction against that. Certainly that's something that I think started heating up during, the 2016 campaign, right?
I think that's part of it, and Joe Doe came on our program earlier today, and he made the point, how does President Biden, who called himself, or it could have been Jordan Fabian too, because we interviewed him at the same time, President Biden reminded us that President Biden calls himself the most pro-union president in history.
I think it was Jordan, yeah.
And this is an election year, and how can you do something that wouldn't necessarily be in line with the union?
How would it not be in line with the union?
If the union doesn't want the company to be
it's not the union's choice. I think insofar as the union is concerned, and this is one of the things we were talking to Joe about last night. Sorry to kind of...
Well, but then what happens to the workers?
Well, so as long as they can get something in writing that that Nippon would honor the contract, right? You could make the case that the board at U.S. Steel has a fiduciary responsibility to its shareholders to get the best offer, $14.1 billion. Lorenzo Consalves, who is now the head of Cleveland Cliffs, was saying, fellas, this is kind of interesting because when the Nippon bid came down, he said, that's it, I'm done, I'm out. There's not going to be another offer. He's coming back saying, yes, I could consider, and it would be substantially lower than the $14.1 billion. So if you're U.S. Steel and you have a fiduciary responsibility to your shareholders and you're not getting the best deal that you can for them, then what's left?
But Is it the union issues that are the problem, or is it the concern about Nippon
I think
Steel's
politically
Chinese
it might not reflect well.
assets? And what do we
They're
need to know
minuscule.
about that?
From
They're
what-
That's
okay,
what Jojo said.
right.
They're minuscule.
Okay, so
Exactly.
Japan is an ally. If they can, you can strike a deal where they would honor the labor agreement, then what is in this story beyond the fact that U.S. Steel was this kind of marquee name? But if you look at what's going on right now, was right?
Good point.
And if you look at what's happening with basic steel production now, I mean, I don't even know that we're doing much basic steel production in the United States. It's mostly kind of the electric furnaces. It's a lot of recycled
So
steel.
Joe actually said it's not a lot of workers that
No.
are in this industry. A
A lot
lot
of
of
it's
it has
been
been
automated,
automated.
yeah. Yeah, yeah.
Exactly. So
This is very sticky, but you
Pence
can't.
is saying, is
but
this
it's an
politics
election
versus
year.
policy?
That's it. It's an
That's my
election
point.
year.
Like getting
Context is
hacks.
everything, or
No.
changes everything.
Get it
No,
right, Doug.
But
Get it right.
But TikTok, the same thing.
Right.
Is this politics
Well, look,
or is it policy? I don't know.
I don't know either. I mean, look at former Secretary of the Treasury Mnuchin putting it together, you know, a group of people
Who was
that.
involved with CFIUS apparently when he was
Right,
part of the Trump administration.
So
yeah.
I don't know where any of this is going down, but I think that you can't get away from the fact that it's an election year.
So should we go back to pie? Is that easier to solve and figure out?
Maybe.
What's your favorite
Well,
pie?
Pecan.
I really don't have a favorite.
You don't have a pie fave?
No, I don't.
I'm actually not a big pie fan either.
Pecan, you make it, you warm it up.
Yeah.
Homemade whipped cream.
Okay.
I've had it for breakfast, for lunch, for dinner.
Sounds good.
All right, guys, that's going to do it.